Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about what I consider to be one of the best price action trading strategies that I use on multiple time frames. But heading into the new year, we're at the end of the 2022. Today we're going to be talking about the opening range and initial balance. This applies for end of day traders as well. But this is one of the main ways I form my thesis heading into a new week and a new month. And the same price action strategy breaks down into the weekly approach with the 15-minute charts, as we talked about in the playbook. The opening range and initial balance on a shorter time frame, Monday, Tuesday, typically will set the higher low for the week. Now, as we get out to larger time frames, the same rules apply. This is a market profile concept and also one that Toby Crable used. He hunted for opening range breakout trades on smaller time frames. When we get into the new year, we can look at your past charts and go back and check these for yourself. We'll run through all the major pairs today. But January typically will set the opening range for the new year. Now that may be inside of a larger pattern. It may be it may break a previous month's boundary, high or low. But by the time January has traded, we now have a high and low of the year. And that breaks back down right into the first day of the month. But once January has traded, February at that point may extend that range. It may break out of that range. It may stay as an inside month. But once February has traded, we may have a higher low in place for at least a few months. And we'll talk about the timing cycles, time and price again, and perhaps even for the year. So Gann used price and time forecasting for 30-day, 90-day cycles. He used it for 100-year cycles. He talked about everything was price and time for forecasting, but I look at price and time more in the sense of the time of day when I'm looking for my best playbook trade setups inside of the day based on those 3-hour windows when the equity markets are trading. Everything is timed and measured throughout the day, but it is on larger time frames also. So if we have a previous year's high or low, if we have a previous month's high or low, when the new year starts, once January and February have printed, if one of those boundaries may hold, or we can get a false break, a range extension false break, an opening range breakout that fails, we know that large moves come from false breaks. And that applies in the playbook setups. One of the first things that can set off a potentially large move is a false break reversal or a marginal peak formation higher low at the higher low of the week that reverses and heads to the other side. So understanding this helps me form a bias for each week because we may be in a down month. So we may be looking for the false move to the high of the week, or we may already be inside of the false move starting a new week, and that could be the beginning of a day 2, day 3 move to form a low of the week, which could turn into a 3-day setup pump and dump for a larger move, and sometimes that will tie in with the economic calendar, etc. But this information is critical for piecing together explosive trade setups on smaller time frames. And for traders who are trading just end of day, this information is critical because you don't want to be buying a breakout that could potentially now be a reversal setup at the higher low of a new month. You could be holding on to that on the opposite extreme. It could be heading from the high of the month to the low of the week or the low of the month. And the same thing applies for a trend trade. If you're looking to counter trend a breakout that you think is a false break, we could be in a measured move now for a range expansion for maybe 3 weeks. 3 weeks of rise again. So these are all critical things that when we head into the new year will help us establish a bigger picture thesis as the year evolves. And for other time frame traders, again, if you're trading end of day and even 4 hour, this information is critical. A lot of these larger time frame pump and dumps and dump and pumps are what will set up massive, huge opportunities on the smaller time frames in the 5-day templates Monday to Friday. The big thing to understand is that when a previous month has printed and we head into a new month, the questions we want to ask are the same things that we want to ask during the week. Did we get a first red month? Did we get a first green month? Was it an inside month? Because those are all potential signal months heading into the new month and the new week and then a 3-day cycle. So understanding that it's about what information has the market already generated for us heading into the new week, which next week we're going to be into a new month, a new week, a new month. Starting back from that, we'll be in a new day on the beginning of the year, a new week, a new month, and of course the new year. So let's take a look at the charts. Now, just stepping back and looking at the big picture, we'll look at the major pairs. I want to show the new year. So if we just take this as our divider, this is 2021. January is our new month. We have a breakout of December 21. We have breakout traders in the market when January prints. When the month closes, we now have a high and low for the year. We have a high and low for the year. That's our opening range. We have breakout traders triggered in the market. They pull back inside. We know that those breakout traders obviously have stops. Maybe they've lowered their stops down to the lower high. Maybe they've been stopped out. By the time February trades, we have our initial balance. That initial balance now is potentially our high and low for the year. When March prints, so again, coming back to the 3-day setups, the same opportunities apply with 3-month setups. Month 1, month 2, month 3, we have traders trapped down low. We have an inside, not an inside month, but the volume collectively is inside, and it's inside of December, January. We get our false break, our high bull, major resistance engulfment, setting up the 3 levels of rise, dump, month 1, month 2, month 3, false break, and the dump trade. Now, I'm not going to go into depth on these because obviously we're going to go through multiple examples. What I want to emphasize is that January, February can form a high and low of the year. One of those extremes may hold. Now, going back through the rest of the year, we have January still being the low of the year, the low of January still being the low of the year. This type of market-generated information gave a buy low short squeeze at the beginning of April. And again, you'll notice the 3 levels of rise. Push 1, push 2, push 3, push. There's our 3 weeks of rise example. Not quite 3, but 3 levels of rise in 2 weeks. The pump up for the dump. Eventually, the market broke out of this larger consolidation rectangle. So we talked about consolidations inside of a large box. That's our box. And if we take a high-low range expansion, we can see that the market's already reached one full expansion of that range as a potential profit target for other time frame traders. But this information month to month, our major turning points come when a new month starts. So January, February set our high and low. Eventually we made a higher high, a break in structure. That gave us our dump and pump setup, the V bottom, making sure we don't want to counter trend the peak formation. The market proceeded to break higher before auctioning down and giving the dump and pump scenario for the large breakout trade. So January still held as the low of the year. Same principles apply each month with the opening range and the initial balance at the beginning of the week. But our new year cycle, January, February set the high and low. January still held the low. This stop hunt through the low, this level though, is what I'm talking about. The level held, that became our basis for a range expansion on a breakout trade later on. If we look at the Swiss franc, we'll just back this up We have a large consolidation where the low potentially may be locked in heading into the end of the year. And we'll put our yearly divider on here again. January trades, and we have our initial opening range. February is an inside month. So one of the things I talked about in the playbook was inside days, inside months are potential trigger days. So again, remember, it's not about hindsight. It's about understanding what did yesterday's market generated information tell us. Is there a potential opportunity? Inside days can often be setups for a reversal, false break reversals on the third level, or they may be an inside bar for a continuation trade, a range expansion. Now, in this particular case, we have a market that has dumped down low, put a high in place in November, came down and put a low in January, pulled back inside and gone into consolidation inside. That inside bar now potentially is a 1, 2, 3. So remember, we talked about the 3-day setups. This is maybe a 3-month setup now where we have a peak formation high, a peak formation low, a consolidation, which is a potential setup for a parabolic trade. The market breaks out and breaks structure, and then we get the dump for the parabolic range expansion. So coming back to, we're inside of a larger rectangular geometrical structure. We can just take the bodies, projecting a target high-low, and this market obviously achieved that range expansion. So one of my mentors, Peter Brandt, who is a classical chartist, who I reference quite a bit, looks at weekly and monthly charts for the similar types of patterns, rectangles especially. He loves rectangles, as I do, because once these markets break out, as we can see, this is a daily chart. This can progress for maybe a couple months. If he's on a weekly chart, that would be the same opportunities potentially now on a week. Peter has stated over and over again, after 40 years in the markets, averaging 40% returns, that it's usually 3 or 4 large breakout trades that make his money for the year. Breaking this down and applying it to our shorter time frames, understanding when we're in a range expansion, we don't want to be counter trending those moves. And if we get an opportunity, as we may have in one of these breakouts, for a buy low in a long trade, we get into a new monthly cycle. We may now have a new week for an opportunity for selling high. Even though we're in an uptrend on the daily, this market, as we saw, had a huge correction. And then we have the same principles apply. Month 1 shorts, month 2 shorts, month 3 shorts in the market, a 1, 2, 3 engulfment reversal. We have explosive opportunities perhaps on smaller time frames in our Monday to Friday templates for best trade setups. So looking at the Japanese yen, if we just scroll back, I'll take these green lines off in a second, but we had high of the year 2020 that we took out in October, then 2018 got taken out in November, and the high of 2017 got traded into heading into the end of the year. I'll just take these, well, I'll leave them on for now. So the market went into consolidation, but then our January, our new year prints, we'll just blow this up a bit so traders can see. January prints, we have a break of December's high, the breakout that pulls back. So now we have breakout traders trapped. We have our opening range now for the new year, our opening range. Then we have February trade. February trades as an inside month. So we have a market that made a higher high. That's our setup for the dump and pump scenario in a potentially trending market. We're in a large rectangle, a large 2-month rectangle, month 1, month 2, and there's our parabolic trade setup coming out of the inside month. The same as what we would look for on a 3-day setup. I'll just zoom in on this. A 3-day setup for a parabolic move, either long or short. Parabolic trade setups offer traders huge opportunities. If you were recognizing this when that week came along and that day came along and that setup came along, again, this can add extra information for us to position ourselves in a best trade setup. Now, coming back to higher low of the year being set in January, February, Obviously, this market held. We had month 1 breakout, month 2 breakout traders in, month 3 breakout traders in. We're looking for the reversal, except the market proceeds to trade higher. When it breaks out and trades higher after the 3rd month, that's when I'm looking for the reset. Now, this market, if it broke down and gave us a high of the month trade for a short, that's different. But it continued its march back up in the long direction. We had new month breakouts in, month 2 breakouts in, and month 3 breakouts in, where we get the death line formation, the big giant triple top M pattern, Batman, whatever you want to call it, with the death line. The death line is when all the volume is trapped above a neckline, and if it collapses, they're all trapped. This is a fantastic opportunity for a large, scalable best trade setup on our smaller time frames. So again, we had 3 months of rise. We had the large engulfments. We had the death line set up. When the new month starts, our timing cycle kicks in. A new week, a new month, new day. We may have a 3-day setup or a 3-session setup even, heading into Asia, London, or New York for a huge parabolic opportunity. And as we've seen, this market continues to break down. Now, we may find some support. No idea. Don't even have a clue. I'll just go by what happens when we trade over the next week and into the new year. We may have something that pumps up and dumps and breaks down. There's a lot of downside. We may see a market put in a low and put in peak formation low into the new year and resume its drive back up in the long direction. Don't know, but we had a huge year, and January's low held for the year. We look at the British pound. We ended our year, we'll just put our yearly separator on here, December. We ended our year and January prints. We break the high of December right off the bat and also the high of November. Market pulls back inside. We have a high and low for the year once January has printed. That is our opening range. The market pulls back inside and stays largely as an inside month. Now, just for simple mathematics, we can take the high and low. That's 589 pips. Divide that by 4, which gives us 147.25, which is essentially 150. 3 levels of 147.25 gives us a level of 1.3601. And as I've talked about, that's what we can project as a potential strike zone. An area where if the market puts in a high, we may get a reversal trade in that month. So tying this in with our weekly thesis, our 3-day setups, and then a best trade setup, we may have an opportunity for a large parabolic move. And again, you'll notice that all this is a pump up, pump, 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 and then the dump. We head into the new month. We have a continuation of that move, a 2nd month trade. This is an inside bar. So coming back to our original discussion regarding the opening range and initial balance, this may potentially set up now for a larger range expansion. If we have that thesis in place, we can take that and as price behaves, project possible range expansions of that high-low rectangle as potential profit target areas. Everything's the same on every time frame. It's fractal. We get the same situations. We get trap volume. We get 3 pushes, 3 levels. We have opening range, initial balance each week, and we have it each month, and we have it for the year. And again, in this particular case on the British pound, January's high held for the entire year. We now may have put a low in place heading into the year. In the end of the year, obviously, that would have to do something fairly cataclysmic before taking out the low of the year. But we have our high, we have our high and low initial balance, the breakout trade, and you'll notice creeping trends do one of two things. They either reverse and explode for a parabolic reversal, or they collapse and blow off vertically in the direction of the creeping trend. This is a textbook perfect example. Each new month gave a death line opportunity on the pound. We had trap volume, a neckline, new month printed. We get the pump up, trap volume, the neckline, the breakdown. That's the M Batman formation, the neckline, deathline trade. And then on the last leg, we get a vertical peak formation stop hunt before the vertical blow off, and low bear major support, locking in potentially the low of the year now. So January was our high. Obviously, there's correlation with these markets. They'll all trade differently, but the same process applies. That's what I'm trying to hammer home, the process. We have a breakout of December's high. The market then breaks down. And think about the psychology behind this. The market breaks out. What does that do? We have breakout traders now in the market. Where will the larger time frame stops potentially be? They may be at the low of the week, the low of the current month, or maybe even the low of the previous month, December. We'll put our divider in for the new year again. We have a market that then forms a high and low initial balance, January, February. One of those extremes may potentially hold for the year. We get our opening range breakout in the third month, month 1, month 2, month 3, just like day 1, day 2, day 3. We get 1 push, 2 pushes, 3 pushes into the breakout, a high bull engulfment, which on the third push becomes our major high bull, major resistance potential level. And then new month starts, the new timing cycle. Isn't that interesting? For the vertical drop. Pump, 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 dump. And again, in this case with the euro, the January highs held, January, February initial balance highs held for the year. We now, again, similar to the pound, may have locked in the low of the year. We're pulled back inside, and we are in the middle of the year. Indexes, we can look at oil and gold. I'll just run through these, and then you can run through your charts and take a look at these and do your back testing on them. That just brings up one of the questions that a lot of traders have been asking me is, are the PDFs and videos downloadable? Yes, they are. All the PDFs definitely are. I'll check that the videos are downloadable. I don't have a problem with people downloading any of that material if it helps you study more. Definitely all PDFs will be there. And as I mentioned, the resource library, I will continue to add more information in there on PDF or video format for traders to have as a resource library to go and reference into. So we had I'll put in our divider. That's our December, January divider. That's the high of the year for 2021. And we get our 3 peak formation, the lower inside high. Study that pattern, you'll see it everywhere. That lower inside high is the trap, and you'll notice when they take out that lower inside high, in a large majority of cases, we'll zoom in on this, they will not take out the overall high. They get traders stopped out. Other traders are holding on for the continuation through the high, and they miss the trade because they're waiting for the high to be taken out. They've already taken out the lower high. Second day of the year, second trading day of the new year, we get an engulfment, shortened M formation at the high of the year, high of the month, high of the new year, high of the week, for a vertical blow-off capitulation. Remember, we had 3 pushes. We have trap volume. This is just another variation of a deathline, neckline trade with volume caught up high. The pump up and then the dump. Now, we'll talk more later in future videos about first red month, first green month. But right now, the simplest thing to focus on is just the opening range and the initial balance, and also 3-month setups. Month 1, month 2, month 3, new year, collapse. Really important to have an understanding of these patterns because they will show up everywhere. They show up Monday to Friday. They show up over 3 weeks, and they show up over 3 years. Over 3 months into the new year. So January has put a high in place. February extends the range. So that's our initial balance. When this happens, February's high may now potentially be the new high of the year. We've gone lower. We've broken down, and the market continued to break down and go lower. When we get the lower low inside, that's our break in structure. The market continued to break lower. Into the new month, we have 1 push, the push to the low, the breakout forms our first push. The new month forms 1 push, 2 push, 1, 2, 3 engulfment on the third push. Third push engulfments typically will be low bear major support or high bull major resistance. We get the explosive parabolic trade month 1, month 2, month 3, parabolic low of the year, low of the month, low of the week, low of the day trade opportunity for a huge explosive best trade setup. The same things apply. Then, of course, we get a market that continued to trade lower throughout the year. We may have a low of the year, but this is an interesting setup on the NASDAQ. We have our 1 push, 2 push, 3 push, and a broken down market underneath our high bull pin on the third push. So I'll be watching this market because I'm not sure. This could be an interesting opportunity that sets up for a possible retest of the low of 2022. Not a trade recommendation, just noticing some interesting formations with peak formations and a 3 push pattern up, a trap volume, a death line neckline, and a high bull major resistance area. We can get something that retests this, but as I mentioned in yesterday's video, we can get some interesting explosive opportunities around the new year starting. Go back and study the first part of this video, the opening range and initial balance. Go back and look through your charts. Go back and look through your Monday to Friday charts, and then use the same process to help identify these bigger opportunities. We have January breaks out of December's high. Then we have our opening range. When we get a higher high breakout and it dumps back down, higher high break in structure, dump and pump opportunity possibly. This is a market that set a high and dumped down. Remember, we talked about false breaks typically start the count. If we have a market that is a false break and we start the count, month 1, month 2, month 3, still inside first green month, it doesn't go in the third month, we look for the possible parabolic opportunity in that second month after the first green month. Huge opportunity on gold that went vertical. This pin was the day that Russia invaded Ukraine. That was a 750 pip day on a 3 levels of rise, 3 weeks of rise, and 3 levels on the final level, 750 pips that completely reversed and went over 1,000 pips down, only to see the new week start and take it out and go even higher. That broke down, eventually gave us our high bull major resistance, which ended up being the high of the year. Month 1, month 2, our initial balance extended the range. Month 3 blows off. Level 3 typically blows off in the direction of the trend before breaking down, going into consolidation, retesting the high bull major resistance level. Again, remember, this is about levels. We could even slide that up to the body opening. It doesn't matter. It's about what price does when it gets there. And that's the key, understanding what price does when it gets there. We're not just getting in, we're watching how does price behave when it gets there. And then if it confirms a thesis on the day for a best trade setup, that gives us a larger time frame opportunity to scale into with a smaller time frame best trade setup. So January's low got taken out, and this is what eventually market profile people would call an open auction. Not textbook open auction, but a market that traded on both sides of the opening range. Peak formation up, it broke down eventually before locking in the low, and now we're back inside where the year started. Isn't that interesting? We're only a week away from the end of the year. The market opened up basically right at that level in January, and we're pretty much right where we started. Isn't that interesting? So go back, look at your charts, opening range, initial balance, heading into the new year. This can give us a lot of market generated information each week for a best trade setup. And other time frame traders, if you're trading end of day or if you're using other systems to trade, this can still give you a lot of valuable information heading into the new month. That's a major timing cycle. As you'll see, we see large changes in direction. We can see reversal trades at the beginning and ends of months. and that can coincide. We won't go too far into this, but Gann talked about 50%. Well, 50% of a month is halfway. 50% of the year is halfway. We can get quarters, 3-month cycles, same as we can with 3-month, month 1, month 2, month 3. We can get quarterly cycles within there, but that's a little bit further on. So hopefully everybody got value from today's video, traders. Again, a ton of great feedback. I will be adding more material, as I said, into the resource library. The PDFs, I'll make everything downloadable. Appreciate everybody's support. My objective for this year is for people to get 10 times the value as what you ever expected to take your trading business, everything to the next level. Have a great day, traders, and may the markets go with you.